Lesson 10, and we're going to have a look at profitability here. Now we have the Superstyle PLC income statement here, which I always usually call a profit statement, but it's called an income statement. So on the paper they gave us the revenue was 200 million, I know it says 200,000 on here, but that is 200 million pounds. The cost of sales is 106 million, so we have a gross profit of 93, almost 94 million. Right, I put the fixed costs in because you go from gross profit to operating profit, which is 40.5 million pounds. Okay, now profitability, there are three ratios we can use. We can use return on capital employed, we can use gross profit margin and net profit margin. We should know return on capital employed. That was the number one lesson, which showed us the amount of money that we get back from how much money has been invested in the business. So here the return on capital employed is 34%. Now from this we also need the balance sheet, which I'm not going to show on here, but I will show on the next slide, and it comes out as 34.5%. Now that is high, so therefore immediately on this exam paper we can tell that the business is doing really well. On top of that, we've got the gross profit margin. We've got a gross profit margin of 46%. It's dead easy, these things. Students always say to me, well, I can't remember all these ratios, but the gross profit margin is literally just the gross profit divided by the sales revenue. The net profit margin is literally the net profit divided by, or the operating profit divided by the sales turnover. Now, so once we have all these figures, what can we tell from this? Well, a 46% gross margin, what that means, for every £10 of goods that you sell, it would cost you £5.40 to make in terms of the variable costs. So you would actually be making, as it were, £4.60 on that good. £4.60 divided by 10 quid is 46%. Clearly, if it's 50%, easier figure to work with, then for every £10 good that you sell, it's costing you £5 to make that good in terms of the variable costs. A high gross margin means that you're making a lot of money on each good that you sell. Also, we know the net profit margin is 20.2%. How can we analyse this? We need to know the net profit margins of other firms. However, this is profitability. How can we increase profit? Well, you can reduce your fixed costs, you can reduce your cost of sales, you may even be able to increase your price, right? Those are the specific ways in which you can increase your profitability. And this is what these three ratios here show. Okay?